Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 20th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic and geopolitical environments, how that impacts the overall markets with my market analysis. Well, I do the same thing in these daily market commentaries, but I'm layering on top of it option strategies I find to implement into my portfolio based on those assumptions I come up with around the economic and geopolitical environments, and on top of that, my market analysis and those market assumptions. I'm trying to create overall yield in my portfolio that outpaces what we could get from just going out there and being in the market net long for the most part, which is what most of us have in our portfolios. So this is a great way to for me to hedge a regular portfolio and try and create some alpha. All right, so without further ado, let's get on with that economic data and geopolitical environment, if you will. And across the pond, we did get some economic data out of European region coming in with the CPI year over year 0.3% lower than the expected consumer price index of 0.4%, which isn't unexpected because some of those prices with that CPI is going to be the goods and services that the consumer buys on a daily basis. When we go to the core CPI, which strips out food, energy, alcohol, and tobacco, that came in line with 0.9%. So a bit surprising that when we strip out some of those food and energy numbers that it's a little bit higher. I would have expected that CPI, especially with what we've seen with crude oil coming off as much as it is, that would have come in a little bit lower than what the reading was there. And then here in the United States, we got crude oil inventories, and it was a drawdown of 5 million barrels, expected to be a build of 1.7 million barrels. So clearly, we are starting to see some of that inventory start to move. That's what's giving crude oil a bit more of a lift here. I kind of expected those 30 handle to be a bit of a tough slog right now, but when we're seeing these drawdowns in crude oil, that is going to be a good thing. Another thing we have coming out today is the FOMC minutes. The minutes, they are good to see what the Fed was thinking during the last meeting, but oh my gosh, we've seen all of these Fed governors speaking already. Powell in front of the Senate panel, and things of that nature. So that is a little bit more of a hindsight thing at this point, as it generally is. All right, so let's get on with crude oil. And we're talking about it moving higher by almost $1 today. Not completely unexpected when we see that drawdown in crude oil inventories. That's going to give it a little bit more of a leg up, if you will. So we're going to be testing that value area low, which is right there at around $35 a barrel, starting to get back into an area where at least Saudi Arabia is making money, right? Here in the United States, our fracking guys and offshore drillers are still struggling to make money. Not losing as much as what they were, though, before, right? That's a silver lining if you're looking for one. Gold futures moving higher by almost $5, about $4.50 right now. It's $17.50, but we're talking about this. It's going to want to stay, I think, right in and around this range, in the middle of the road. As a matter of fact, I put on an iron condor, if you guys remember, and I am looking to try and take that off. I'm a penny away at this point. It should probably be getting filled at any moment, but we'll talk about that GLD trade here towards the end of this market commentary. All right, bonds up 11 ticks. Again, right in the range where we've talked about as the sweet spot. Really right around 180 or closer is where we're talking about. So we're about a full point away from that. We're toying with the 179 handle as we speak. But something we talked about yesterday was we did on Monday finish below the 9-day simple moving average and the 50-day simple moving average, which is giving us long-term bearishness. So we could start to see this roll over a little bit more, maybe even test the value area high if we stay down here too long, just to press out some of those people that have gotten long this market. We've talked about this being a support level here. If we start breaking down much more, we're going to probably see a little bit more pain to the downside, and that's where it will be overextended, getting ahead of ourselves with this coronavirus and the new vaccine that may be the savior. You know, you keep in mind it's still a rumor, and that is really what's driving the markets right now is hope rather than fear. All right, so we've got the Dow Jones Industrial Average moving higher by about 316 points, retracing almost all of yesterday's losses, which yesterday we talked about it was probably more of some profit taking going on after the big rally we saw happen on Monday, and that was based off of hope, right? And then we've got the shorter term covering of trades, which happened yesterday. Now today we're getting more of a bounce back as people are still looking to get into this market. All right, NASDAQ up about 145 points on the day. Yesterday we were looking at it like it was, especially towards the end of the day, it was we sold off into the close, that it was really looking like a bearish spinning top doji right here. You can see right here with this red doji, it's a little bit off, but you can see right there that red doji signaling more of a top, and that wouldn't be bad to have, because as we're seeing here with higher highs and higher lows, that this might have created a newer higher high, maybe roll over, as long as we stayed within this trend channel that we're kind of seeing here. But it broke through that, which is fine. We are still kind of tracking into that trend channel, looking at, you know, 52-week highs coming up right around the corner. We're already above the highs seen at the beginning of the year, so we are up on the year, and seems a little bit crazy, but again, remember the NASDAQ is the one that is holding a lot of those stocks that are going to benefit from people working from home and things of that nature, very tech heavy, which is what we would be seeing in that type of environment, being a service sector and people working from home. And then we go over to the E-mini S&Ps. They're moving higher today by about 45 points on the day. Again, tracking right in between that area that I've been talking about. 3,000 is just right around the corner. I think that we might see that as a psychological resistance, not only there, but because we have the 200-day moving average, which is this right here, the 200-day simple moving average, tracking right along with that Fibonacci, which lines up with 3,000, very close. You know, my Fibonacci says 29.98. Well, I'm going to be saying that's 3,000, and that lines up with the point of control for the amount of volume, the changing of hands, the trading that happens. So that is where we are going to see more of a magnet, if you will, drawing the market to that point. And because we have that 200-day moving average, the Fibonacci, and the point of control all lining up there, it's not going to necessarily act as a super, like we settle above 3,000 and all of a sudden the bulls think, okay, we've beaten that Fibonacci, we're going to take off to the upside. I don't know that that's necessarily true. It's going to be able to toggle back and forth a little bit more easily than what we would see as a normal resistance, overhead resistance kind of line in the sand. So keep that in mind, that we might settle above 3,000, and that doesn't necessarily mean that we are out of the woods on tracking back down, because I think that we're going to want to stay within this area right here for the, you know, at least the next couple of weeks, build up some volume, create a nice rounded off, kind of like as I've shown here, a kind of nice rounded off bell curve there, bring that time volume node up and closer to where the volume node is right now currently, which is that red line right here. All right, so let's get on with the breakdown of the daily chart. We can see this is 30-minute. At the end of the day, we really sold off yesterday towards the close, finished on the lows for the most part. Today we came in and we are very long overnight inventory, not even attempting to really get flushed out. The economic data on that crude oil is definitely going to help to the upside, as we're showing that there is demand coming back for it, which means that the economy is starting to move a little bit, despite the fact that we are seeing, now keep in mind, we are seeing more limited supply, and could, see that drop because the supplies aren't coming back in, but we are over exceeding that with that drawdown there that we saw today of 5 million barrels. So that's giving a little bit of push to the upside. Right now we have seen a little bit of sell-off, but that is normal market activity. We are above yesterday's value area high right now. That is giving more room to the upside for the bulls. All right, something that I have done, and I talked about this yesterday, that I was looking at with EA Sports, was looking to cover some of my position in there. Well, I covered half of that position on the open, probably a little bit worse than where we're trading right now. It's actually very close. And I sold out a half of my position of EA Sports at $120.16. Now, my average on that, if you guys remember, I had bought much lower and then gotten into that 1x2 or the ratio call spread. I wanted to take advantage of the underlying if it broke above 115, which it did, and then those expired worthless. The short 120 calls that I had on against it was long 115 call for every 2 of the 120 calls that I was short. Collected a credit for that. I got to keep that credit, and if we got to make a rally, I was going to be able to capitalize on that. So collected all of the premium for the short 120 calls, got long the stock at 150, 15. Well, I did a little bit better than that by having those calls called away for me, or having those taking the stock from somebody at 115, I should say. So got a little bit longer in that and was able to get out still at 120, which is what my goal was, to start pairing off some of these at 120. Well, I got out a little bit better than that at 120.16. So lowered my overall cost basis on those trades quite dramatically. Also pared back some of my winning trade on that. Well, what did I do after all of that happened? I decided to go in there and sell some puts. Now, I'm staying mechanical, right? If the market pulls back, then I want to add back in my position to get back to the full tranche that I was looking at. And in the meantime, if it doesn't happen, then I lower my overall cost basis on the underlyings that I still own. So I went in and EA Sports. So in EA Sports, I didn't do a very good job of circling that. I went into the June and sold the 105 put. So I sold 105 puts in the June for a credit of 64 cents. All right. So collecting 64 cents on that trade lowers my overall cost basis of my remaining underlyings, because I got out a half of them. Well, I basically am looking to roll back into those half that I got back out at a price of 105. If we make that market move way back down to the value area lows, which I don't expect in this time frame here, right? Because the news is out. We expect that the market is priced in. We don't have to worry about earnings. Yes, it doesn't fit my rules necessarily on EA Sports by having high implied volatility. Well, that's usually on a directional assumption. This is a little bit different. My mentality is I want to add to my overall underlyings. I'm staying mechanical with the stocks that I have in my portfolio. And if I want to add more stock to my portfolio, this is the way to do it. We don't necessarily worry about that high implied volatility just for a trade to get in and out. I'm looking to hold on to this for the next 30 some odd days. All right. So my mentality on implementation of options into our portfolio in order to create that portfolio is different than when we are looking at just trying to trade, get in and out of this based on a directional assumption. I don't necessarily have a full-on bullish directional assumption here. I'm looking at dollar cost averaging, which is a little bit different on the setup for mechanical purposes, and we don't worry so much necessarily about that implied volatility. My thinking here is if EA Electronic Arts gets back down to 105, that's where I want to start adding some more to my position. So a little bit different than our some of our webinars where we talk about just a trade based on a bullish market assumption. We have different rules for that. The other thing that I am looking to cover, and I was talking about, I thought I would get it filled by the end of this webinar, and it just hasn't happened yet. It should be very close, but we are looking at, for me anyway, I'm looking to get out of this trade. Oh, it's filled. I don't know why we didn't hear the ding go off, but I got filled on this trade in my gold iron condor, GLD. And if you guys remember, I had put on this trade for the webinar on the 8th, so I haven't been in this trade for very long. I got in on the 5-8 right here and expected gold to trend sideways here, at least right in and around where my Fibonacci lines were. Well, we did break above that, but with the wiggle room and the amount of volatility coming out of it, as you can see here, we had volatility kind of around 26. We got 6 percentage point drop, which is great. We're looking for volatility to come out of this trade because that helps us get to our profit potential much quicker. This was based on a trade, right? So I followed my rules on that, where we had high implied volatility for GLD. It has dropped by 6 percentage points, so has worked out correctly. We've got the theta decay happening because, as you can see, I was in this for from the 8th, so 12 days. I got that theta decay happening. All of those things helping. The volatility, to be honest, is the thing that really helped out a lot more than anything else that we did. But I did this in the June. I had bought the 146, sold the 151 puts. All right, and then I added in the selling the 173, buying the 178. Defined risk strategy for a third the width of the strikes. 137 is what I'm looking to collect on a strategy like this and get out of it when we've reached 50% of max profit. Now we know if we're collecting a credit of $1.37, that is our max profit. Anytime you're collecting a credit, especially on a defined risk strategy, your max profit is that collection of credit. So what's 50% of 137? Well, it's right there around 65 off the top of my head, 60 some odd cents. I got out at 67 cents. So we can look at that as being about $1.34. So I made a couple extra pennies over the 50% of max profit. So out of that trade, out of GLD, all of those things worked out quite nicely according to my rules that we found in that webinar for the iron butterfly. So check that one out. Anytime we have a market neutral assumption, this is a great, the iron condor, market neutral assumption in there, trading sideways, trending sideways. We've got volatility coming out, exploiting theta decay for our right duration. All of those things have worked out quite nicely on this trade for that webinar. So if you don't know the rules or the way to stay mechanical with these types of trades, that is a great webinar to go and check out because we talk about implementing this specific strategy for the iron condor in that webinar, and then the next day I put it on. So couldn't have worked out much better. You couldn't have drawn it up on paper any better than it working out like that. All right, so that's all I got for you guys. Please take a moment to go over our disclaimer. As we are an educational company, I am not here to give you guys investment advice. We're just talking about trades that I do on a daily basis that I find based on my market assumptions that fit my portfolio. I don't know what your risk parameters are. I don't even know what's in your portfolio. You guys may have a completely different market assumption. As a matter of fact, I was talking to one of our students today who is wildly bullish in gold. Well, I had a market neutral assumption in it. It worked out for me. And this trade might not have been the best trade for his assumption. All right. So if he was wildly bullish long term, we wouldn't have wanted to do an iron condor. All right. Check that out. Go to protraderstrategies.com, and if you can't take that, take it easy.